about this very aggressive style of trading, are you doing reverse pyramiding, meaning maybe you go in with 40% of your total portfolio size, and then as soon as it starts working for you, you're kind of taking some off as it works, or are you kind of building a position into a breakout or that type of thing?
So how I trade is I normally start small and then I build up and then I go back small as the stock becomes profitable. So if that's what you call reverse pyramiding, I always use progressive exposure. I never just dive into the market until I get some traction.
Right,
I'm putting in test positions. As
right.
soon as those test positions start working, I ramp up really fast. And this is the difference between a pro and an amateur. An amateur is going to probably need a lot more evidence, and by the time they get the green lights, it might be a little late. And that's why progressive exposure, a lot of people say, oh, well, I tried it. By the time I ramp up, then everything pulls back and then I pull back. Well, that's because you're not moving fast enough. You're not
Hmm.
seeing what you need to see and reacting quickly. I've been doing this so long that I know, when I see the whites of the eyes, I know when to shoot. So I move up very quickly. Now, as I start, these stocks start going up, then I start scaling out into
Hmm.
the strength. And that's a big part of not having drawdowns, is selling into the strength, because what you're doing is you're always at equity peak.
Yeah.
So the stock may keep going higher, but you sold at the highest price. So even if it comes down, you're out, right? So there's no downside give back, and there's no upside maybe either, but you're at that point, you're at equity peak. So if you sell into strength, you're always selling at the highest price, so there is no drawdown. It cuts off the volatility. Now the other thing too, I might add, and this is really important, I'm
Hmm.
always angling, and because my big performance is one thing, but what I'm really, really, I think, good at, and what I'm proud of, is the fact of the low drawdowns. And because most people who get the big performance have the volatility too. So what I do is, at all times, I'm always thinking and trying, my aim is always to improve my worst case scenario. That sentence literally is a multi-million-dollar sentence. If you just think about that, always improve your worst case scenario. So let me give you an example. So I buy a stock, it
Hmm.
starts moving up. Okay, so now the first thing I want to do is I want to protect my break-even point. I want to finance my risk. So as that stock moves up, I can move my stop to break even. Now I just improved my worst case scenario. Prior to that, I had a stop, let's say at 5%. So my worst case scenario was a 5% drawdown, right? So
Hmm.
now I've improved my worst case scenario, but I can even make it even better. Let's say the stock goes up 8%. I have an 8% stop. I sell half of it. I can now allow that stock to come all the way down and hit my original stop and give it the room that I wanted to give it originally, but break even. So I've
Hmm.
improved my worst case scenario, and I've given myself a chance also to participate in a bigger move, of course, with only half the gain. Or I can move my stop to break even, sell half. Let's just say it's up, 16%. I sell
Hmm.
half, and now if it stops me out at break even, I guarantee myself an 8% profit. So